How's it going, everyone? It is Thursday, April 25th, 2024, and this is the video for today. So before we get into the market, before we get into what's going on today, what's the D1 look like, we're going to get into the pick from yesterday, which was SYF. So first, let's take a look at the daily chart here. Excellent post-earnings breakout. We're already through this downward sloping trend line, breaking out of this bearish channel and posting a new, I believe a 52-week high, but not an all-time high. So SYF was looking really nice. And I think when I took the trade, it was popping out of compression right around here. So took the trade, and the market at the time was pulling back, and we had this 1OP bullish cross pending. So it's looking pretty good, but it was fairly late in the day. We only had maybe 90 minutes left, so nothing crazy. Stock ended up just kind of compressing for the day, so I ended up taking a scratch on this day trade. The real winning of the day trade was to get in around here, ride the move up, and then slowly add into it a little bit later. So I actually did take it earlier in the day, but I got out because I got spooked by this high of the day candle, but we had the market tailwind and the stock strength to break through that. And so if we did break through that and we passed that test, then I could add to that position. So anyways, SYF was a scratch. The other two picks I called out were the Levi on a breakout of that post-earnings high. So let's take a look at Levi. Did not happen today. You can see stock is pretty down today after rejecting this level. That's okay. Ideally, if it can hold its AVWAP and make another strong move, we could see a nice break through that. So I think Levi is going to take some time. Wells Fargo, I mentioned that we want to get in off an LRSI H1 alert. You can see how the stock has made a big move up, and the price action started to wane on the 23rd, pulling back to the 8 EMA. If we take a look at the H1 chart and we put up LRSI, well, I can probably already see that this is going to be bearish, but let me just put it up anyways. Or not bearish, but it's going to be low. It's going to be flat. Yep, so it's coming over here a little bit. So once we get that alert, we're in good shape. I'd also like to see a breakthrough this downward sloping trend line on the H1 channel. So I'm going to set an alert here, and I set that completely wrong. So let me do that again. Let me set a GTC alert on this trend line. So LRSI alert, break through the channel. And then, we can kind of evaluate the price action. The price action. We'll see what the market does, and we will go on from there. So Wells Fargo might be setting up. Again, no trade, but we're keeping an eye on it. I think it could have a nice setup in the future. All right, let's take a look at the market today. What changed? What came out? What happened? Major thing yesterday was Meta earnings. So we're going to talk about our longer-term fundamental buys first, because earnings and mega cap tech earnings is one component of that. If mega cap tech earnings generally have a positive reaction across the board, that's generally bullish fundamentally. The bottom line for the stock market is that we want companies to be making money. If companies are making money and we have positive earnings reactions, we can feel more bullish. So in this case, Meta, I think, I didn't read the entire thing. I don't read all the earnings reactions. All I knew is that it was down after hours, perhaps some lower guidance. I think they said that they need to spend more money on AI, and it's not going to get the revenues quite yet. It's quite expensive. So perhaps it was down after that. All I knew is after hours, I was eyeing Meta for a day trading short. If it's set up, it's set up. Did not end up materializing today. And here you can see the reaction. Huge, heavy volume over here, some follow through, and then it's kind of just pitter-pattering over here. So that's what dragged the market down initially. The second thing that dragged the market down was the GDP number. So GDP expected was 2.3% growth, and it came in, and this happens every quarter. So this is the Q1 GDP for the US. Came in at 1.6%. So this is at 8:30, open right at 5:02, and then you can see that negative reaction all the way down to 9:30. So definitely a little decent little drop over here. Dropped about $5 on that. And the market did drop yesterday to Meta. So the market closed here. So about half of this was Meta, and then the other half was that GDP drop. So those two things might affect our fundamental bias. Now, we still have to wait for other mega cap tech earnings to report, but what I like to do is just see across the board, how are the reactions generally? So if we have all the Mag 7 and they all beat earnings, they're all looking really good, all the stocks jumped up, that's pretty bullish for the market. They're big drivers for that. If the mega cap tech were very weak and we saw a lot of big drops across the board, then we can feel a little bit more bearish, because these are a huge component of the market. If they're not doing well, the market doesn't have that boost. It doesn't quite have that fuel. We want them to be humming along. So what does this change? Now, I'm still, again, pretty new with the, not pretty new. I would say new. I'm still learning the fundamental aspect of it. And I was reading Pete's comments this morning, and Pete does a really good job of talking about the implications of the GDP growth. So what he was saying was that earlier with GDP growth, the economy was humming along and we were doing well in a high interest rate environment. So the Fed had really no pressure to ease up because they don't want inflation to come back. As long as inflation it's not super high anymore, it's still a little bit higher. You could say maybe 3%, right? PCE deflator is also coming out tomorrow, so that might be a market mover. As long as that is strong, right? GDP, the economy is still growing, the economy is doing well, employment's low, the ISM services are coming out good, GDP is coming out good. Okay, economy is strong, we don't have to hike rates. Now, if the economy starts to falter, right? Let's say unemployment goes up, let's say the GDP growth slows down, ISM services starts to go into contraction territory, then the rhetoric and the implications of the rate hike changes, because people would be worried about a recession. People aren't worried about recession if the economy is good. If the economy is weak, now all of a sudden they'd be worried about a recession. When the interest rates are very high, right, the economy slows down, ideally, or not ideally, but, you know, in the past, that's what is supposed to happen. That's really how quantitative tightening works. Slows down, and we have that elevated recession risk. So the FOMC meeting coming up on the 1st is going to have some more importance, because people will want to know, hey, GDP is slower. Do you think you're going to cut rates now? Are you worried about a recession? That's what they're going to ask. So the implications of the rate cuts have changed. We know that rate cuts have been really fueling the market, and the expectation of how many rate cuts and the timing of those rate cuts are the key story in the market. So that is going to affect that story. That's what the information we received today with GDP growth, that's how it kind of factors in to the big picture. Okay, market technical now. So to me, my fundamental bias is I revised it from a 2 bullish to a 1 bullish because of the GDP growth slowdown. And that will change on a couple of things. If we get a more aggressive tightening cycle, more aggressive cutting cycle, if the Fed does agree to that, then the market will do very well. I think it'll respond positively or bullishly to that. So that's kind of what I'm watching for on the bullish side. That's what would get me a little bit more bullish. And if the next GDP growth, let's say, does meet expectations or beat expectations, then that would also get me a little bit more bullish. So, long-term technical bias. What is happening over here? So, we finished, or supposedly finished, the down cycle, the pullback of our longer-term trend. So this is, right, we had a cycle here. another down cycle, which is compression. Nice cycle here. We got some down cycles, and then we reached the end of one of the cycles where it started to go here. This is the end of the cycle, and the market starts to move sideways. So we pulled back, and then we formed a low, and then we had a nice close above this low on the 23rd. And we took some starter longs at the spot. Now we had some, because of the meta earnings and the GDP, the market had a pretty big drop overnight, over 1% drop. And let's zoom in to what is happening here. Our shorter term bias was bearish on the move down, and it was bullish over here, and it was still even bullish over here. Now my shorter term bias is a little bit more neutral because we had this GDP, we had this meta reaction. We could form a higher low at this point, and that would be nice. But we also never quite tested the S&P 100, so that's kind of in the back of my mind, like, hey, we usually test it. And the reason I was thinking about that is kind of what Dave had said all the way back in October. We had this breakdown over here, and we started to rally, and he said, look, this is pretty weird that we didn't test the 200-day SMA. Like, we did test it after hours or pre-market, but that's really not a real test. You want to test in the market. So that's kind of in the back of my mind, like, hey, we really should have been testing this. Then we actually did end up testing it about 2 weeks later on October 20th. So that's when we got the test. So that's kind of here, right? We may test it, we might not test it. I don't know. I'm just keeping this in the back of my mind. If we form this this higher low, double bottom, and then we start to get up higher, that could be a nice bullish sign. But this high is pretty close to the 50 SMA, so I'd at least want this level to kind of break through, and then that would get me a lot more bullish. So shorter term, I am neutral right now. I'm not looking to take any in the money calls or any more PCSs right now until I really know that, support is in, and we kind of get through some of these mega cap tech earnings. They've been kind of moving not as expected across the board. Now, support, as you can see, is obviously going to be right at this level, this 494 level, which matches the low and the 100-day SMA. Resistance is going to be this gap. The 8 EMA will provide a little bit of resistance intraday, and then we have the top of this range, and then finally the SMA 50 around 511-ish. So those are kind of the minor levels to watch out for later in the day. And if we do break through the SMA over here, we have another level right at this low, couple of touches at this point, 490.77. 490.70, that's kind of the point that we would want to get in at. Or I guess not get in at. I was just mincing my words there. That's the point we would watch for any sort of bounce. Very minor level, and I wouldn't be too overly concerned. That's just kind of what I would watch for. So, swing traders, what you should do. So, if you are in any starter positions, see how this day closes. If they're looking pretty weak, I would probably exit them to kind of see what happens here. So I took tiny losses on GE, and I was in AXP long, so I took some tiny losses on those because on the gap down, I didn't quite know what was going to happen. And in my PCSs, we're still in the on PCS, so let's take a look at how that is doing. Let's go to the D1 here. So still holding up pretty well, and I'm still going to hold on to this PCS unless the market cracks down below the SMA 100. If it cracks down, then we get a technical breakdown. I would expect on to also crack down, and then that would not be good. I'd have to take the loss or exit out of the spread because my market bias has changed. But as long as we hold this level, then I am okay with sticking with on. So I am less bullish. You could put on some put credit spreads, but again, just be ready that if this level breaks, then be ready to get out of it. And I don't really want to manage too many put credit spreads right now. I want to be mostly in cash because we're pulling back here. We got some events. The FOMC might be pretty big next week, so I'm going to keep it a little bit more short term, keep it more light for this week, for the next week or so, and see what happens. So if you did take GE over here, GE, very, very nice relative strength, holding it pretty well. Took a tiny loss here. So I took it right around here. And if you look at the GE chart, I got in at here and I got out at here. So it took maybe a $2 loss on the stock. That's okay. Not too big. If the market finds support, I know GE is going to take off and I can get back in for a very nice win, but I don't know what's going to happen right now, so I'd rather just play it safe, right? My short-term market bias has changed. I expected the market to be marching up higher, and it didn't do what I expected. And so I'm out of the positions. I didn't really add to them, and that's okay. I'm okay with taking that was on the market didn't do what I expected, so I'm out of the trade. So what type of trades are we looking for? Well, I think we can day trade on both sides. There's certainly a lot of volatility over here. I've had some excellent day trades over the past couple of days. Still working on the setups, but I'm getting much better at spotting them and taking them and making my market plan. So if you're a swing trader, you don't know what to do and you want to really make the most of your time, focus on your day trading and see what you can improve. It's a really important skill for times like these where you don't have a strong market opinion either way. If you're not crazy about day trading, at least look at taking debit spreads. Short-term call debit spreads or put debit spreads in very strong stocks where you can hold them overnight, take a small win, you manage your risk, you set your expectations. So learn how to do those. And those are the two strategies that I'm going to be focusing on for the next week until we kind of see what happens with the market. We kind of get some direction over here. We're still bullish technically on the longer term, but right now, shorter term, we're a little bit more neutral. We know that this is a critical juncture, and we know that, okay, this news, it could affect the bounce that we were expecting. The other thing I'm looking at here are earnings time spreads. I don't think I mentioned these on my channel that much, but they are a pretty popular strategy. They're a trend neutral strategy. So that's going to be one of my picks for the day. And I'm going to go over that in just a minute over here. So with all that aside, let's look into the intraday chart. What happened? What happened today? So market yesterday, some volatile chop, and we formed a nice bullish hammer of the day, which I like. This probe of support is looking pretty good technically. Big gap down from the news, so we know there was news. And then we probed for support, we made a new high, and then right here I was like, look, this is a pretty weak move. So I took some day trading shorts here on this bearish cycle, expecting the market to at least test the low of the day and see if we break through it. This bear cycle concluded and the market finished pretty much right at the high of the day. So I said, okay, you know what? That didn't produce. It's more likely that this next bull cycle is going to produce. So I exited my day trading shorts. I didn't take any longs at the moment. I still wanted to see if we would get into the gap. We got into the gap, and then we got this bear cycle here, very short, and then this bear cross, so we produced. So over here, around 130 was an excellent time to get into your stocks, and I'm actually long Dell right now, which is doing pretty good, not as strong as I would have liked. So I'm gonna just keep an eye on Dell as I do this video. I'll quickly go over what I like at Dell. It's not my ideal day trading short. A lot of stocks didn't do great with the market, but it has been doing pretty well on a daily chart, not dropping. This is, where's he here? Here's the April 15th candle, market down, Dell holding all the gains. So I think a PCS could also set up pretty nicely for this over here. So I like this bullish candle, and more importantly, pretty clear skies until the high over here. We got a high around 126, so that's going to be my target. I'm going to ride it out to the bull cycle. Dell is producing, but you can see there's a couple of mixed candles over here. There might be some sellers looking nearby, and I do want to see what SPY is going to do. I'm pretty bullish on the market at this point, though. The volume is pretty low, and the price action is pretty good. A lot of green candles, pretty tight. You can see I've drew all these channels that are looking kind of crazy. So I'm going to start out with how I started this over here. So let's get into the market price action. Earlier in the day, the market components were not insanely bearish because mega cap was pretty neutral. Tech was pretty mixed. There was some weakness, there was some strength. Semis were very strong. Comms, retail, discretionary were pretty low, obviously because of Meta. Meta is going to bring the comms down, the retail down. Maybe not retail as much as some other stocks over there. A lot of weak healthcare stocks as well that were coming into the picture. So pretty weak early on, or not pretty weak, but slightly weak early on. VIX was up, but RSP was actually greater than SPY. So if RSP was less than SPY, it would tell us that there's a lot of sectors that are weaker than the market, and that's kind of dragging it down. So that would give us a stronger indication of a more conviction in any sort of market downtrend. We also know that on a major gap down, on long-term buyers may be looking to get in on this price, and we could get a really nice bullish trend day. And it looks like that is what is happening over here. So we're getting certainly quite a bullish trend day. Volume is pretty low, but excellent opportunities to day trade. And there was more stocks on heavy sell earlier in the day, which is quite natural. A lot of earnings and just very big drops. A lot of stocks are going to respond to that drop. So not the most bearish, but certainly slightly bearish. Now, my intraday bias in the first hour was neutral, and then once I saw this red candle, I was a little bit more bearish. I said, look, this bull cycle didn't really produce. It did make a new high of the day, but it's pretty weak. We kind of booked the gap, and then we got a nice smackdown at 10:30. I like this double top. It's not a lower high, but I do like this double top, and this could have set up nicely for some relative weak shorts. So that's what I saw over here, and you know, again, like I said, it didn't manifest. So a couple of scenarios that could have happened at this point, and this is the bullish scenario that played out where we made a higher low and then we managed to grind higher, break the new high of the day, and we produced on this bull cycle. The bearish scenario would be we break through this low of the day and then we test the 100-day SMA because we are probably one bearish day away from that SMA at this point. The other range-bound scenario is that we kind of test the low of the day, don't do anything else, test the high of the day, don't do anything else, and now we're probably going to be stuck in the range for most of the day. So that was the other scenario, and those scenarios are important because they'll help you guide what you should do with your trades. So for example, if I was short and we had a range-bound scenario, right, let's say this bear cycle produced, the bull cycle produced, and we're over here, I would ride my shorts until they kind of lost steam, because the market's not going to give me any help, and I'm really riding the stock trend at this point. Now, because the market is bullish, right, and this we got the bullish scenario over here, I had to exit my day trading shorts because I didn't have the market bias in my favor, and they can only withstand the market for so long. So I'm going to look at something like WHR. So I took WHR short right here, 1055. Excellent relative weakness, broke down over here, but then the bear cycle didn't produce. So bear cycle didn't produce, it was right over here, and I took profits somewhere around here, right? And then I didn't really miss that much of the move. It's still relatively weak, and I had lots of time to exit the trade, and I still would have always been in profit on this trade. But the market, if the market gets stronger and stronger, eventually it's going to drag this stock up no matter how weak it is. So that's an example, of just recognizing the market conditions are changing. The great thing about relative strength and relative weakness is that you have a time and a price cushion to get out of the trade, right? If I was short right here, I don't have a price cushion, right? I don't have a time cushion. So I would have had to take a loss on this trade. Instead, I would have taken a nice win. I even had a chance to exit at the low of the day at a double bottom right here. So, there's also that. Now, let's give some of the picks for today. I'm going to give one pick right here, and I'm just going to have my Dell chart in the background, so keep an eye on it. Make sure it's not doing anything crazy. Keep an eye on the market as well. And I took Dell right around here. So we're going to go to pre-earn options. And with earnings time spreads, there's a couple things we want. So first, what I like to do is I like to sort it by, well, first, before I get into this, if you don't know what earnings time spreads are, go to the wiki, read it, and make sure you can explain it to a 5-year-old, right? Make sure you can explain it, understand what's happening in simple terms. And the TLDR of these time spreads, so I'm going to give you, the pick is going to be WDC. The TLDR of the time spread is that there's a lot of call buyers into here, and there's a difference between the IV of this week, the at the money IV of this week, and the at the money IV of the next week. And so this difference is explained in this column right here. there's a lot of difference and a lot of IV because there's a lot of expectations into earnings. There's a lot of unexpected moves, right? There's a higher probability of a move as this information comes out. So after the move comes out, the air is let out of the balloon, and the difference between those two at-the-money options decreases and it collapses. And that decrease is how we make money on the earnings time spread. So over here, we have a lot of symbols, a couple of key columns here. So here's the expected move based on the at-the-money option IVs. So we can see this expected move, and then we have the average move. So we always want the average move to be less than the expected move. So something like INTC, right? Average move is greater than expected move. So this would actually probably set up better for a strangle, which I don't trade because I don't really know how to do them, but maybe I'll paper trade it. I don't know. I already have enough strategies to focus on, so I'm not going to focus on these strangles. IMTC, right? Average move greater than expected move. We don't want that. The second thing is the number of times exceeded. We want this to be less than 20 ideally. If it's higher than 20, there's a couple times it might be like 30 or 25. You want the difference to be high, right? So this is your risk. This is your reward. Ideally, you want very low risk and higher reward. So we want this to be at least 20 or less. That's the kind of the basic criteria. And we want the difference to be at least 30.35 or 0.4. The bigger the difference, the greater the profit potential on the trade. The final part is the option liquidity. This is important because it helps us get out and in and out of the trade, especially if you're trading many contract sizes. Like I'm just going to be trading one contract, but if you trade many contract sizes, you want higher liquidity. So, you know, something like this, it's like, oh, okay, maybe Charter does set up, like this is a pretty nice setup, high difference, very low exceeded, average move expected than the lower than the expected move, but has terrible option liquidity. So it might be really hard to get out of the spread. And, you know, I don't really want to mess around with that. So when we look at this chart, the first thing I'm looking at here is I sort it by liquidity. So I'm looking at the most liquid options. And ideally, I want something that's above 0. I'll take 0, but I like something that's at least a 2. Then I look at the number of times exceeded. The lower, the better. My eyes zero in on the ones that are less than 20. So I see WDC, okay, really nice here, 6.67. So 94% of the time, this stock does not exceed its earnings. Then we look at the difference. Hey, this difference is 0.91. This is a huge difference. Let's look at, and to match the risk reward, let's look at something like, here, NYCB, right? Well, that's actually a pretty high one. Let's look at Guild, right? So Guild also, look, lower than expected. Average move is lower than expected. Also rarely exceeds the earnings, but the difference is about half. So you have the same risk, but about half the profit potential on the stock, and you have lower liquidity, so it's a little bit harder to get out. So WDC is going to be the pick for today, WDC earnings time spread. So let's go, and what you would do is, I'm just going to do 5 strikes here. So it's at 69.70. So you could do either the 69 or the 70. So let's say you would sell the call this week, and then you'd go next week, and then you would buy the call. Oops, make sure it's the same strike. Yep, and that seems about right. So you'd buy it for a debit. You can see it's 0.43 for 0.68. So take the midpoint somewhere here of what is this, 15 cents? So maybe somewhere like 50 cents. So you probably take it at a 50 cents debit, and then you'd set your profit target tomorrow. Now, because it's a Friday, you're gonna get extra benefit because of time premium decay on your short strike. So this April 26th is gonna have both the IV crush on its side because you're selling the premium, and the time decay on its side as well. So both of those, basically the entire spread is going to collapse. So both of them are going to drop, but your short call, your $70 call, is going to drop more than the $70 call you bought for next week. Because this first strike drops more, that's going to create the profit potential, right? All that IV, because the price is being boosted by the IV. So when the IV drops, it's going to drop faster than the one for next week, and that's how we get our profit. So I'll do that for a 50 cents debit if you can get that. And then I would target, I mean, on a Friday, you can target 50%. So you could set something like a 75% or 75-cent target on this stock. And if you're feeling more conservative, then, do something like 25 or 30% if you don't want to risk it. But this has a really high profit potential. So you can even set it for something higher than 50% if you're feeling so obliged. So, yeah, that's what I like with WDC. So that's going to be the pick of the day. First earning time spread pick, but works out pretty well. I think this is a really nice setup. And we'll see how the market closes over here. And yeah, that's going to be your pick for the day. So thank you for watching, everyone. And we're going to take a look at WDC tomorrow.